Good morning, ARMR Insiders. Welcome to the morning meeting of the virtual hedge fund we call ARMR Investing. Thanks for spending your time with me this morning. You're one of those people down there on the trading floor. Come on up into the conference room and let's get our day started. We're going to talk about KWEB in a minute. That's our highlighted stock of the day. I can't believe I'm talking about that. But let's look at the market real quick. We're going to talk about Meta, Tesla, Google, Microsoft. The start of the week, the end of the week. These are the things that are important. So as I go over this, remember, you're a portfolio manager on the desk. Take the information, make it your own, be the smart money. Here's KWEB. Is it time to talk China? You know, if you know me, you know I have no interest in talking China. I'd say to you guys, how can I possibly invest in China when I can't trust the legal system? I can't trust anything about that country. So how can I do it? That's true. And that's the reason I'm going to cut you off right now before you ask me. I am not buying an individual Chinese stock. I'm not buying BABA. I'm not buying any of the individual stocks. I don't know how to value the companies. I'm not sure I could trust the numbers. Okay. So it's very hard for me to have this conversation with you. But I will buy an ETF if I think money is flowing into the country. You want to know why? Because I avoided INDA and I realized, which is India, which is just unbelievable, right? This is just a huge run going on in India. And I realized that I am US centric, US and Canada centric, because I live here, right? And that's what I like to trade. That's what I feel most comfortable with. But there are pockets of strength around the world depending on liquidity injections. Okay, that's the key to this conversation today. So in light of India, okay, I look at KWEB and I see this breakout here and I feel I would be remiss. I feel it's my responsibility to share with all of you that chart pattern. Look, we have ARMR Report subscribers. We have ARMR Insiders all over the world, and I love you guys. Hong Kong, Dubai, Israel, Singapore. So Ecuador, a lot of South America, right? So Europe. So you guys are not US centric, right? And so I take from you, you guys direct message me. We talk a lot. This is why I call it a virtual hedge fund. I love it, right? Because we're all portfolio managers on the desk sharing the information. Okay. And what I love is that it opens my mind up to think, to get out of where my comfort zone is and look at this chart and say to you guys, something's going on here. So let's go over what would be the fundamental reasons why this is happening and do I want to get on it? If you can come up with other fundamental reasons about what's shifting in China, please let me know. Here are my thoughts. First of all, in my neck of the woods, everybody hates China and everyone's afraid of China taking over Taiwan. And hate and fear create opportunity when you're investing. I personally don't think there's any chance, okay, any chance that China is going to march boots into Taiwan. I think that's ridiculous fear mongering. That's my opinion. I don't know why they would possibly do that. They're going to absorb Taiwan perhaps over years because that's the way they've always executed. I just find it shocking if they were to do that. It's a risk, but fear and hate create opportunity when you're investing. The other opportunity when you're investing is when a government decides to liquefy a market. And if we believe, and this is the hard leap, if we believe Chairman Xi and what's going on there. I know the economy's in a death spiral and all the ghost towns that have been built and all the real estate problems. I get all that. China knows the playbook. The U.S. did it in 2009. Add massive amounts of liquidity, print your currency like crazy. Do whatever you have to do to create liquidity. They say they're going to do it. If they do it, the market's going up. Here's an idea. And I've been hearing about this for a long time. I don't know if it's going to happen. But if they ever devalue that currency, asset prices go through the roof. People are going to get out of the yuan and go buy all kinds of equities, commodities, whatever. And we're seeing commodities go like this. We're seeing the Chinese government buying tons of that chart pattern. I say, geez, man, maybe it's time for me to open my mind a bit and have an allocation to the Chinese market. Those are some of my thoughts right now on China and that chart pattern. If you have others, I'd love to hear about it. Put it into the comment section of this video. ARMR Insiders, share it in the Slack room. What am I missing? You know, I don't need to talk about the hate and the fear. We already know what that is. So what's going on that makes that chart look like that? And it's early. That's it. This is week 1. This is the daily chart. Look at the weekly chart. This is week 1. If we're ever going to do it, we want to get it as close to the stop as possible in week 1. Breaks back down, obviously we're out. That's not a hard decision. Blows out from here. We're not chasing it. The risk gets worse and worse the further away it gets from the stop. This is week 1. Do we want some exposure to KWEB? We'll see. Let's see where it closes the week. You know, we don't have it yet. We don't have it yet. I want to talk to you guys on the desk about it. And let's wrap up. So I'll talk to you guys on the desk about it. Let's keep thinking. Let's see how it behaves today and tomorrow. And if it closes the week strong, it might be a position.